This is the FFR Trading Market Minute, and this is a daily candlestick chart of the SPY. That's the ETF for the S&P 500. And last Wednesday, last time we shot the video here, we had a Fed day. Fed announced no raise in interest rates, but more rate hikes could come in the future. Market tanked last Wednesday. Then we had this nice gap down, and we talked about this head and shoulders pattern here, that the trigger would be a close below the neckline, which is here. We got that on Thursday. And so that is a bearish signal. In technical analysis, they'll measure from the top of the head to the neckline, and they'll draw a target, a measured move. And the target would be down here at 406, we'll call that, on that head and shoulders pattern here. Now, our oscillator was oversold here. On this day, we got a one-day rally there, but we made a lower low in price here. Draw that lower low here. But notice, as far as our oscillator here goes, we actually have a higher low. So we may be setting up some divergence here, and that is a sign of this selling is losing some steam. You see we closed with a nice little, was that hammer candle here. We pointed out this open gap here that they may come down and fill this gap. They pretty much did that today before the market ended up rallying and regained a lot of what it lost today. So moving forward here, our next support would be the line that I've drawn below here. I do think because we have this divergence, we could rally. Typically, we would, when we break that neckline, all right, they'll come back up and test the neckline to the upside. And if that holds, as in this case resistance, then we should see the thing roll over and get another leg down, probably into this support here. It's possible we could come down into the support on this current leg down here, but because we've got some divergence forming, the way this is set up, it's possible now that they fill this gap. The tendency is a lot of times after they fill the gap, you get some type of rally, and maybe we get a rally into the neckline kind of resistance here. Now there is an open gap up here that could potentially be a target fill, and you've got the 20 period moving average above that. So we'll see how this plays out now, but again, the ultimate target on the head and shoulders pattern will be down here at 406. Some of the important economic data events next week: we've got Monday's ISM manufacturing PMI. Wednesday, we've got the ADP employment change and ISM services PMI, and Friday's average hourly earnings and non-farm payrolls. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.